Annual financial support from viewers like you. This is Frontline.
I think that what has been happening is a kind of fear approaching a panic that's spreading through the baby boom generation, which has suddenly discovered that it will have to provide for its own retirement.
If retirement is a bridge to be crossed when we get there, then let us begin.
Have you thought about how much you're going to need to retire?
Sure. I have. I think I'm probably going to need anywhere between $1 million and $1.5 million to retire.
That sounds like a lot of money.
It is a lot of money.
Are you there?
No. No, I'm not there.
All these particularly late baby boomers, people in their late 40s and 50s, they've been spending their whole life. They have not been saving. And now they see their retirement not that far off, 10, 15 years. Hey, people don't believe there's going to be any Social Security. There will be something called Social Security, but it's not something you're going to want to live on.
The stock market was not a factor in my parents' lives. My father was a member of the union. He had a pension. He retired at 60 years old, and my mother still lives on the survivor's benefit of that pension.
And that's never been a possibility for you?
It was not the road I chose. I'm counting on the market for my retirement. Micron Technology up 1 1/4. Excellent.
With so much riding on the market, we seem to have forgotten what a fragile and human instrument it actually is. How much its movements depend on how we feel about it. Right now, at a moment when we're counting on the market as never before, we feel it will always take care of us. But will it?
In nature, in life, in everything, there are cycles. There's no such thing as the elevator that only goes up, which is what the stock market is in people's minds now. The risk is that if that process gets started again, and we only traverse back to what the average level of expensiveness, never mind cheap, like we were in 1982 when this bull market started, but if we only get to average, that would mean a decline in the stock market of 50%.
In other words, just to revert to its historic norm, the market would have to lose some 3,000 points.
What'll happen is we will simply get too high. There won't be enough new money coming in to keep the market going up. Losses will start, and losses will beget losses, and then people will be people, and they'll sell.
595 is 500 of the pars. 595 is 500 of the pars. Buy me 5 ain't it. Buy me 5 ain't it. I want to bring in these shorts. I want to bring in the Gadzooks, Outback, okay, the impossible stuff to buy, and HMTT.
The real trap for any investor in a market that's been as volatile as this one, where rumors sweep through the internet, is believing that you can get in early and you can get out early and you can beat the consequences. And of course, if everyone believes that, it means no one gets out early.
I want another 10 Boeing. It's absolutely right, okay?
It may be true that over time, the stock market will outperform other forms of investment.
10,000 trades, 7 8 right here.
But it is also true that you can take 10, 15, 20-year slices out of that long track record and find very disappointing returns. For example, if you'd invested at the height of the 1960s go-go market in 1968, you didn't recoup your investment until 1982. If those happened to be your retirement years, you were in real trouble. There is no immunization of the American stock market that keeps us from ever having a long, dull, grinding bear market. It could happen again.
One of the things that I find myself worrying about is what would happen if we had a sustained bear market after a lot of the baby boomers had retired. They were all past 59. They were beginning to draw from these different retirement plans that were invested in the stock market. And yet suddenly their stocks were underwater. On paper, their investments were down 30, 40, 50%. What would they do?